Okay, hi everybody. I'm happy to welcome you to our first Cornell City seminar of the year. Today, I'm very excited to have Charles Albert Lehalle, as well as Sylvia Ruiz, giving a flash or lightning talk towards the end of the hour. And I put a few informations in a few links for you in the chat room. The first one is we have a YouTube channel where this seminar and our past seminars reside and our future seminars. So as they say in YouTube parlance, go there and smash on the subscribe button and get in touch with us. And this seminar this year, I'm really excited because we're trying this new format. We have Charles Albert Lehalle, who pretty much doesn't need any introductions, who's really an expert in quant finance in almost every arena. I'm become a friend of his in the last few years because he's a great scientist, but also a great engineer and really cares about science that works and has applications. So he's a bit, a bit like me, has one foot in academia and one foot in finance and the practice. And I would like also to say that his 2 feet are very firmly in each camp. So anyways, every year he publishes this really interesting quant finance calendar where he brushes each month over the certain topics. And I noticed that this year's calendar had a lot of topics that had to do with NLP. And I'm really excited to hear what he has to say to us on NLP. And so he's gonna give us a 40-minute presentation. Afterwards, we're going to have a 5-minute Q&A. So please put all your questions in the Q&A box, not the chat box. If you'd like to just say hi and share your thoughts on NLP or your contacts, then you should use the chat. But if you have a specific question, please put it in the Q&A. And after 5 minutes of Q&A, we're going to start with Sylvia's talk, which Sylvia has done just graduated from Cornell Financial Engineering last year and was involved in an FE project with Rebellion Research. And this project had to do with scraping a lot of language data and applying NLP techniques to it. And she has a GitHub repository that you can also find in the chat room. And I'm hoping that this will help a lot of our community get started. One of these, NLP is a very, very exciting topic, but it can feel intimidating to get started because you need to scrape things, you need to apply some packages, and we hope that after today's talk, you'll have a lot of tools to do that. So without further ado, Q&A if you have a one-sentence question for our speakers, and chat if you really just want to chat, introduce yourself, and meet other people who care about NLP. So without further ado, Charles Albert Lehalle.
Okay, thank you for the nice introduction, Sasha, and for the invitation. So I will talk today about NLP. It's not something I'm very familiar with, even if I started my first NLP project, I think 30 years ago now, but it was far more, simple than what can be done today. And in fact, in finance, it is the first time I'm discussing that publicly. Of course, at CFM, my team is using NLP for more than 1 year now. So we have in production some predictors and some strategies related, using NLP. But here, so after a short introduction about the context, I will talk about a joint work by Mengda, who is here with us. And so it's an ongoing work. So do not hesitate to ask questions, to comment, to send me in the chat some links, any papers that I'm not aware about or you think I should have more used in this work, please do it. So yes, why trying to use NLP in financial markets? First, of course, when you do systematic strategies for investments, maybe you started 30 years ago using technical indicators, so moving averages and so on, and you were capturing things like cycles, inertia of governance of companies, things like this. But in fact, what you try to capture is information about the companies. So, but what you've got this information, what is important is to be able to bet on that. And so you are going on markets, and then the magic operates. I mean, you push the price somehow because you want to buy, you push the price up because it's a double auction game. It's something that Sasha knows very well. And so via this kind of market impact, the price will change. And so you've got this information, this link very specific between the information and returns. And now with NLP, you can try to immediately access to information as it is, not to numbers like balance sheets of companies that maybe 20 years ago as an hedge fund you started to use. Then you use, I don't know, supply chain data that are always descriptive. I mean, there are variables that are describing some economic values for companies you are trading. Here is something that is a little bit different because it's somehow pure information. It's text, it's speech that is transcribed in text. And so this information, how can you use it? I think that it's important to try to understand what you are modeling because usually, especially nowadays with NLP, you've got so many parameters that you've got a high risk of overfitting. So what can you hope? First, you can hope to understand very quickly an information, maybe a little quicker than other people. And so you've got a speed advantage and you will start to buy before other people are buying. And so before the price move up. And so this speed advantage, you need to be very accurate and very quick on something that is quite specific and I would say very localized in time. And you've got the second aspect that is you can be roughly correct, but on a lot of text concerning a lot of companies. So here you will place the cross-section of this information. So you don't need to be that accurate. You just need to be sure that when you rank companies according to what you captured, the ranking is correct. So the companies that you put on the top of the list are will go, I mean, more up, I mean, or will have better returns than the companies that you ranked at the bottom of your list. And this is probably here where you've got a lot of things to do with NLP because you've got a lot of possible texts. Sylvia will talk about Edgar feelings, but you've got, it's a lot of text. You've got financial news. You've got, of course, all the social media. And you've got all the speech of the earning announcements, for instance, that are transcripted. So you've got a huge corpus of text. And even if you had people, humans, experts to read that, they will never be able to come back early enough to you with the information so that you can take decisions using so many documents on so many companies. So this cross-section is a very nice way to try to use NLP. And so just to sum up a little bit with that, so information, we know for long that information is key, and here is key, and here we are trying to address immediately the information, directly the information, not figures and numbers who are describing something that comes maybe after or before these numbers, but I readjusting what you could think about them. And so, I mean, this is a hope that we can have in using NLP on financial markets. And of course, a lot of people are starting to do that. So you've got a lot of academic papers. And for instance, here, of course, most academic papers, you've got curves that are going up. Okay, I'm not saying that they are not good. I mean, most often all these papers are very properly done. But the way is, okay, you take a corpus, you try to identify words, lexicon, either via supervised learning, like in this paper. So here they try to make I mean, a correlation between some terms appearing in texts and the fact that the return of the companies are going up. So you supervised your system on the returns of the companies, and then you design a strategy, a portfolio, and you've got numbers that are going up. Here again, another way to try to use this time a lexicon to identify texts that are positive or negative and to build portfolios. Then there is a lexicon that is now very well known, the Loughran-McDonald, and I will investigate on that in few slides. And you've got also older paper, you see, that are using this lexicon to try to infer positive sentiment on stocks and negative sentiment on stocks, and you are long of the positive ones and short on the negative ones, and you hope on the cross section to make money, to have something that is predictive out of that. Okay. And when you zoom of what you are doing, so in some papers, people are really trying to comment and with, human analysts to try to understand the structure of the sentence to identify the words that are positive or negative. Okay. This is something that is like really lexicon based, but of course, and we will talk about that in a few slides, you've got all the embedding, word embedding based methods that are more, I would say, self-supervised, and that start to be used also to try to build predictors on financial markets. Of course, all the big providers of data like Bloomberg, so here you can recognize Gary and Gideon, who are trying, so at Bloomberg, who are trying to link information, texts, especially when you work at Bloomberg and or Reuters, for instance, you've got a lot of text, and you try to link the text with events on the prices or on volatility or on volume traded on stocks. And you've got companies that are really, specialized at Ravenpack. I remember the first time I've heard and I discussed with people from Ravenpack, I think it was 12 years ago. And so they are building for long NLP system to try to give package sentiments, I would say. So it's something that is highly used in finance. And now that you've got all the buzz around ESG, you just type ESG and natural language processing on Google, and you've got a lot of pictures. So a lot of people are using these methods. Either they are lexicon based, either they are, because of course you've got a lot of attention on BERTs and these kind of algorithms, either you try to use these kind of algorithms, but then the point is, what can you capture? And I think that what I try to do, and when Mengda joined me to try to do this exploration, is we will try to understand what can be really understood, what can be done with that from a scientific viewpoint. So I will not show you any P&L curve. I will not show you any, I don't know, Sharpe ratio. It's more how to combine lexicon-based systems and embedding systems on a financial corpus, and what can you hope for? What is possible? Why is it somehow important? It is that on the one hand, you've got all these lexicon-based systems. On the other hand, you've got embeddings. And what you would like to do is to combine them. And so, because these lexicon-based, they are most often built by humans who have written, it's like analysts who annotated a lot of text, and then you record the annotation, and you end up with something that is saying that when this word is in a sentence, it's a good news. When it is in another, when another one is in sentence, it's a bad news. And on the other hand, you've got embeddings. So embeddings, it's more like a modeling of the probabilistic context of words. I will say that with more mathematically in few slides. And you are just capturing this kind of probabilistic conditioning of words ones by the others. And how can this approach work together? And so here, what we will try to do is to try to explore how it can go together, and why doing that. So here is more or less our plan. So we try to understand what by nature word embedding can capture. When you look at the loss function, when you try to understand what kind of structure they are able to learn, you will see, and it's a concept that will be very important for this talk, that they are trying to capture somehow synonyms. And these synonyms, I mean, it could be good if you can capture synonym because you reduce the complexity of a text. Instead of saying this is great, good, wonderful, you just have one token that has the same sense, and so you can use it in an algorithm. But you will see that the way embeddings are capturing synonyms and structure of a language is not that semantic driven, meaning that they can easily not be able to make the difference between synonyms and antonyms. I mean, words that are exactly opposite, but they will be, it will be very difficult for a system based on embeddings to make the difference between them. And so now, if you think about mixing that with lexicon, it's a big question because if you want to inject your lexicon in a system that cannot make the difference between antonyms, so you want to understand the polarization of the sentiment, good news, bad news, but your embeddings are not able to make the difference between good and bad. So what hope can you have? And it is what we are trying to explore here. Okay. And doing that, we want to do like a synthetic experiment. That is something that I didn't saw that much in NLP. So therefore, we are trying to build a generative model of a text, and then we can control the structure of the text, the structure of the semantic, and see if we recover what we put in the text. And I mean, you will be surprised. It's not that easy to recover with this kind of standard techniques what you put as a structure in the language. Okay, so as I said, it's a joint work with Mengda, who is here with us, and it's motivated by more than 1 year of work at CFM by the team I am managing, the data analytics team, with more or less our data science team at CFM. And so people like Sylvain Champenois, Jean-Charles Ningretto, Elise, and Agustin, I mean, discussed a lot with us, and we discussed a lot together about how to do something with that for CFM, that is an hedge fund. Okay, so my plan here is to go through some theoretical aspects, and it's something I wanted to do for long, and thanks to Mengda, I succeeded into going forward in that. Then this idea is about trying to understand if it's easy or not to recover something that you put in a text. So thanks to this small theoretical aspect, we can build language, synthetic language, with given structures. And so we can see if we recover the structure or not, how difficult it is. And it is just a question of identifiability, a statistical question of identifiability. And then we will use a large corpus of news, financial news, and try to apply these methods to see how it works. Can we recover different polarities of sentiments using embeddings? Okay, so a little bit of theory. So we will mainly in our work, we are using the word2vec Skipgram method. But you will see that according to me at last, it's quite generic because it's really significant of a lot of embedding driven systems. But first, just describe a skipgram. So you probably know already this picture. I don't like the picture for neural net for long. I prefer formulas. So in fact, it's quite simple. Okay, you've got a word. I mean, you've got V words in your vocabulary, and so if you want to question your word2vec with a word, you put it as input. So just you take, in fact, the corresponding element of this matrix, that is a matrix of embedding, W, and it maps your word to a row that is, in fact, the softmax of transpose of X times W prime. So this is a row of a stochastic matrix, okay? So this is a row that sums to 1, and the elements of this row are simply the probability to see another word, so it's a row of size V, the size of the vocabulary, and at each coordinate, you've got the probability to see this word in the neighborhood of the word you questioned. Okay. So if you want to know the likelihood of the appearance of xj, I mean the word number j around the word number I, just compute this softmax. Okay, and so it is done very simply. I mean, it's a low rank decomposition of the low rank decomposition of a matrix that usually nobody knows, and this matrix is not really written in usual papers about embedding. So it's quite simple. You can write that as a neural net with just one hidden layer and a softmax output. But it's simple. You've got a V times N matrix. You enter with one word. So then you recover one embedding. This embedding, you multiply it by the context matrix. You end up with one row. You apply a softmax so that it zooms to one. And each coordinate is a probability that this word, number 2, 10, is usually in the neighborhood of the word you put as input. Okay, and if you use the softmax skipgram, in fact, what is important is that what is the neighborhood is just that this word is inside the next capital C word after the word you started with, the input. Okay, it can be a little more complex, but let it keep simple and put it like that. Okay. So now I will claim that it's quite generic, because what can you do more than that? Okay, you can put more than one word as input. Okay, but in fact, putting more than one word as input is just increasing the dimension of the input space. Instead of having one word, you've got pairs of words. I mean, tubes of words. I mean, sequences. It's not that different. It's just the dimension is higher. Then you can try, and it's very important, to localize those two matrices, okay, the W and W prime, saying that in fact, I will take another version of this matrix, another version of the embedding, another version of the context, if I am in a given surrounding, in a given context, in a given, like I saw these sentences around me. And it is, in fact, what attention heads are doing, what BERT is doing, okay? Just being more local. And instead of having one large global embedding, you've got a lot of local embeddings that are addressing contexts. And you do that just being more nonlinear. In fact, those two items are the same. If you are more nonlinear, it means that instead of having one big embeddings that is flat, one big context that is flat, you've got a nonlinear one. And so when you combine two words, it depends of the context. The outcome depends. But at the end, I continue to be convinced that, in fact, if you could do, I mean, it has a sense to say that there is a Taylor expansion of BERT in the space of embedding, and probably if you would compute the Taylor expansion of a BERT in the space of embedding, you will see a word-to-vec, nothing more. Okay, and so what we are talking about here is simple, but in fact very generic in the kind of understanding we can hope to have if we understand the embeddings. So now, just to put it clear in terms of formula, so the loss function, when you see a sequence of words now with a word-to-vec skipgram, from you start with a xk, capital X are the words appearing in the corpus. So capital X1 is the first word of the long document. And so it's the word number K of the long document, and then the sequence of other words. And so what you want to have is an estimate of the probability. So this estimate is parameterized by W and W prime of seeing, after capital XK being the word number I of your vocabulary, so you see this sequence. Okay, and this is just a softmax. So you multiply the numbers, because for the word-to-vec, it is an IID setup. And so you just have this expression to understand the likelihood of this neighborhood, and it is the loss function that you will try to optimize. A concept that is quite important, at least we will use a lot this concept, is what we call a reference model. Okay, a reference model is just the big hidden matrix that you never see. Okay, it is a V times V matrix, and the entries are the words of the vocabulary, and a row is simply the sequence of probability to see all the other words in the surrounding, in the neighborhood. Okay, so it is this big matrix. The advantage of considering this matrix is that you don't have any softmax on this matrix because it's already a stochastic matrix. Okay, it is when you try to reduce this matrix via this kind of low rank reduction that now you end up with a row vector here that is not summing to 1. So you've got to put a softmax. Okay, and you've got a lot of different reference models. Okay, there is a reference model that corresponds to a given word to vec. So you learned a model according to an embedding. Now, if you multiply W by W prime and you do line by line a softmax, you obtain this big matrix, and it is the view by the word to vec of this true hidden matrix of the joint distribution of all the words. But of course, this joint distribution exists as soon as you've got a corpus. Okay, you could compute it manually. It's just quite CPU intensive and memory intensive, but it's feasible. And more than that, and that is the most important reference model, it is the hidden one, the one that generated the text. Okay, if you see a text, what is interesting if you want to model the text, to build a language model, to build an embedding, it is not really this corpus by itself, it is how it's structured. So it is a real probability distribution, or a joint probability distribution over the world. So you've got the reference model corresponding to the hidden probability law of the language you are analyzing. There is one realization that you can statistically compute empirically an equivalent, that is somehow these lines that you will obtain are statistical estimates of the true one that is not visible. And then if you compress, you've got the equivalent, but after compression. So how does the three reference models speak together? So there is something that is quite simple. If you start with a true reference model, a big matrix, and now you want to have embeddings, so a compression, and compress just one dimension. If by chance you've got two lines, two rows that are exactly similar, if you look at the loss function, what will happen is that it will just map the two words, the two input words, on the same output, because those two, it means if they are exactly the same rows, it means that those two words have exactly the same distribution of words once you see them around them. So in fact, you cannot make the distinction between them. So the best way to compress is just to map them on the same embedding and to reduce by one line this big W prime 0. Okay, so this is trivial. Okay, so what does it mean, this triviality? It just means that if you've got the compression, the projection, the association of words inside embeddings, these word embeddings, they will try to put together words that have the same surrounding. So the same neighborhoods, the same words around them in the corpus. So it's something that you would like to have, and but it's not always wonderful. Okay, if in your corpus each time you've got a sentence like look at this bad guy, you've got also a sentence look at this good guy, and if each time you've got this is bad English, you've got a sentence saying this is good English. In fact, you are not able to distinguish between those two words, bad and good. So an efficient word to vec, it will put bad and good exactly in the same position. They will have the same embedding. Okay. So, and it is what we can call frequentist synonyms. So they are antonyms from a semantic viewpoint. They are not synonyms, but because if you see them in sentences in the corpus, they are always in the same position. They can be substitutable. They will your model, your embeddings, the embeddings you want, as sophisticated as you want, they will not be able to distinguish them. Okay, so that's important to understand that. And of course, not all words. So this is, I mean, if you think about that, it is related to all these papers about ethics of NLP. When you want exactly, so you want to obtain that, you want that the context of women and men are exactly the same, and you don't want any bias in the embeddings. Okay, but here what we want is the embeddings to be biased for positive and negative words, especially if you want to draw conclusion for financial investment. Okay, another example, and you will see that it's not that trivial, because it's not because the sentence seems similar that you can have exactly the same embeddings. So the colors, for instance, red and yellow, okay, you can have exactly the same sentence with red and yellow interchangeable, but not always, okay? I don't know how many yellow apples you've got, probably lower, I mean, not that frequent as red apples, but for sure, you do not have any red bananas, okay? So it means that inside a context, an embedding that can use a context, it will understand that yellow is not red, just because if you've got a corpus speaking about cooking, it will be able to see the difference. If it's a corpus that just speak about cars, it will be far more difficult. So there is a context, a very important room for the context. And we will see that, for instance, financial headlines, it's very difficult for them to make the difference between antonyms, because these financial headlines, they are like punchy lines. And in fact, they are like placeholders with good and bads exactly at the same places. Okay, so I will go a little faster on that, but let's say that it is feasible for Word2Vec to generate a corpus using a Markov chain. Okay, so you start with a Markov chain, you change it a little bit, and then you obtain a generative model. And when you structure the Markov chain, you structure the big W0 prime, and so you can put structure in the text, and you can really put it exactly as you want. So you can also make some computations if on Word2Vec to understand what is the loss function. And in fact, you will understand quite quickly that the loss function of a Word2Vec, when the text goes to infinity, is in fact a cross-entropy between the true distribution, these big reference matrix models that we never observe, and the one that is compressed, you estimate by the Word2Vec. So this is really the kind of metrics that you are optimizing. And we know a lot of things about cross entropy. It's nice when you get, I mean, small dictionaries, but with big dictionaries, cross entropy are difficult to estimate. Anyway, let's go to the first experiment quite quickly. So the first experiment, we put either structure, either no structure. So we design synthetic languages with synonyms, and we try to see if it's possible to recover that. The synonyms are simply blocks in our big matrix. And in fact, so we see different, so I will, maybe first we go with that. Here we generate a long document on a vocabulary of 1,000 words. And we've got here few blocks, okay, 10 blocks of 80 synonyms, and here more blocks of less synonyms. It means that the intrinsic dimension is lower here than there, and effectively we see that the embeddings are able, so this is the learning rate, okay, during the epochs, okay, you see that the learning rate is going down for an embedding of size 200 that is more or less compatible with what you can expect to have with this kind of matrix. What is surprising with this kind of, what is surprising is that embeddings are very poor in identifiability. So here, just for the record, we generated a long document over a vocabulary of 50 words only. So very poor language. And when you've got a large embedding, it is not able to recover this low dimensional space. Okay, it's very difficult for it. Okay, it's probably coming from all these random matrix theory aspects that says that in fact, when you are highly symmetric when you start, it's very difficult to find a spike somewhere in high dimension. And so here we we have more or less the information that we wanted to understand, I mean, the compression capability of embeddings and so on. And here what we do is that we compute the cosine similarities between the embeddings of synonyms. So it's decently high, and with other words, it is close to zero, other words of the once it's learned. But it's not that high when you are in a high dimension, okay? Here, the cosine is in fact very low, but significantly different than zero. And this is the cosine of synonyms, okay? So it explained the fact that, in fact, once you trained embedding, you do not have to look at the intensity of the cosine similarity, but just that it is larger. I mean, it is closer, according to the cosine, to this word rather than to this other word. But the amplitude by itself is not really meaningful. So now I'm going fast on the real corpus. Okay. So how to recover this kind of structure? We use the Loughran-McDonald lexicon that is widely used in finance. So you've got so a lot of words that have been identified by experts. So here you've got an example of the first words, first positive and first negative words of this lexicon. And we will focus on positive and negative only. And we will look, if we take a corpus, how the embeddings are able to make the difference between negative and positive words. Okay, you can do that with embeddings learned on Wikipedia, or on financial news headlines, or on financial news body, so longer text. Okay, so we've got plenty of text. Okay, 12 years of news, a lot of news, so we can afford to train each year a model, and also to address the stationarity of all that. The first point is that, as expected somehow, if you compare how headlines of financial news are able to make the difference between positive and negative words, so positive, negative is there, is far less than what you can do with Wikipedia. What you expect, because it's cosine similarity, is that negative and negative are very close, positive and positive are very close, and positive and negative are, very far away. And here you see that on headlines, they are in the same range, whereas at least on Wikipedia, positive and positive are close together, and negative are close together also. Okay. Now you can try to see the stationarity. So it's year by year. You've got this curve that are, so for the body and for the headlines, the cosine similarities between groups. Okay. And you see that headlines are not that stationary and difficult to make the difference between positive, positive, negative, negative, etc. For the body, it's more stable, and it goes in the direction you expect, because positive and positive are there, negative and negative are there, and they've got a higher cosine than positive versus negative. To finish with that, the stationarity issues. So here we took two banks, I mean, JP Morgan and Barclays. Here we put Facebook and Google, and we look how these words, so the names of these companies, are close to positive words or negative words. Okay, and so we will see that banks are closer to negative during the crisis. It's not the case, but they are in fact quite orthogonal to most polarities. Okay, maybe here, no, not that much. And Google and Facebook, you see maybe more uncertainty around them after a while. So there is this aspect of the positioning of vocabulary inside, inside the embeddings of the learned model. Okay. If I try to wrap up just on this aspect of the financial news and the Loughran-McDonald lexicon, so you need to understand that, in fact, this kind of model, I mean, the word embeddings are not made to make the difference between what we call frequentist synonyms. So words that have always the same surroundings, they will be at the same position. And it's especially true in headlines. So it's very difficult to learn an embeddings on headlines, and then to try to make the difference between positive and negative words. So you will have to do something else. And well, I mean, words that are meant to be neutral, like company names, they have some proximity with some polarities, probably because they've got the sum surrounding in sentences. And moreover, we saw that the embeddings are not that stationary. And just the last slide to conclude. So if I had few takeaway of our work, so embeddings, they are maximizing the cross-entropy between the model, so the compressed probability distribution, and the real diversity of the language. They focus on probability distribution of neighborhood of words, and so they cannot make the difference between frequentist synonyms. And the more structure you've got, the easier it is to learn. So the more you can compress the embeddings. And financial headlines are not that good when you've got punchy lines with placeholders to make the difference. If you want to go further, probably doing multitask learning, so training simultaneously the embeddings with a task that is supervised by polarized word, I mean, a lexicon can be a good idea. The non-stationarity, it is another story. And the fact that company names are polarized, it may be a good idea because maybe it's a simple way to try to understand if a company has a good reputation or a bad reputation, because it's substitutable with a good word or a bad word. And so, I mean, you can use that if you want. Okay, I'm on time, I think.
Yeah, thank you. Thanks, Charles. So, so I guess now we're going to go through our first 5-minute session of Q&A. And so I'll sort of ask you some of these questions sort of back to back, and feel free to, say, I don't totally understand that question next, okay, because we have a bunch of questions. So let me go with the first one. To what extent can companies try and cheat NLP algorithms to avoid being portrayed negatively and shorted in the short term?
I think that, okay, you can dream about that, but I think that the first concern is not companies who are trying to cheat, is more like you've got more and more news that are written by computers, that are generated by NLP. And this is probably far more complex and far more difficult to handle because they are generated using this kind of generative models. So what will you find? So they can be fine-tuned, engineered, and then you can generate news talking about things, but with a structure that is not the one that you can expect and is totally controlled. So I do not think that that companies will do that. I do not. Maybe I mean for long. I mean central banks, they are paying a lot of attention to what they are saying when they are speaking. Is it really different? I don't think so. But it's more this kind of news that are generated by computers that are more difficult, because if you mix them with real news, you don't know what you will capture if you want to compress that.
Okay. Then we have a question by Marshall Guan. He says, in addition to getting buy or sell decisions based on sentiment classification, could NLP algorithms suggest a target price, volume, or holding period? So we're going into sci-fi here, but how far are we from this?
No, I think that you can use NLP to try to deduce some analyst estimates, for instance. And not because you are trying to build numbers with text. It's just that inside text, time to time, you've got an analyst saying, okay, my estimate of the PE, I don't know, is that. And so you can fill some blanks and you can capture part of the picture and filling some numbers. It's not like you are really deducing a price, is more that you are extracting. So it's more extraction of information that are numbers, and you can qualify them, understand them, put a label on them, and put them at the new value of an estimate that is usually updated only once a quarter.
Okay. We have one question that I know, and maybe even Sylvia has some thoughts on this because I know she's looked at this. Why does the Loughran-McDonald lexicon seem, from what this person has seen, to be so imbalanced in terms of negative versus positive words?
I don't know why, but it's true that you've got far more negative words than positive words, and it has been done by humans. So, but I mean, you've got to know, and Sylvia, maybe you will elaborate on that. That it has been set up on the EDGAR. I mean, the 10K, I think, or 10Q. I don't remember. So maybe in this, there are highly legal and structured documents by lawyers. So maybe that's why you've got so many negative words, because lawyers are very protective. You know.
So Sylvia, feel free to chime in, or maybe keep that. We can keep that for after your presentation if you prefer. Okay, so an anonymous question. Charles did a lot of work on transaction cost modeling. Has he found a way to apply NLP on transaction cost modeling?
No.
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 That's a great.
I even didn't suit about doing it. So.
Okay, and now we're starting to get into funny questions like, how is irony processed by NLP?
In fact, there is a large literature on that, because one of the playground of NLP is IMDb comments, and there is a lot of irony in the tweets also, but they are very short text. I think that currently the standard of NLP are made for very short text, and they are quite efficient. The issue or the specificity of financial text is that they are very long. And so, in fact, you need to localize the topic. What is the topic of this sentence, of this group of sentence, or this paragraph, before applying a sentiment? And it is why mixing embeddings and lexicon is important. And this is why we were working on that. It's on the one hand, you want to use embeddings to identify the topic of a paragraph, and then you want to apply a lexicon to know if it's good news or bad news about this topic. And so irony, it's more for small texts that it's useful. And in fact, it's probably not that difficult. And there are academic papers on that.
Okay, well, thanks, Charles. So I think that now I would like to go to Sylvia's lightning talk part of the presentation. So as I mentioned, Sylvia Ruiz is a recent graduate from the Cornell Financial Engineering program, and she was in a team of 6 students working on NLP applications, and she has a GitHub repository, which we have a link to that. Actually, if I believe it should be in the chat room. But so, and we'll leave another 5-minute slot for questions after her talk. So if you still have some questions, or if you feel that your question was unanswered and maybe you want to rephrase it, put it in the Q&A. So, all right, Sylvia, your turn.
Hello, my name is Sylvia, and as the professor said, I'm a recent CFM graduate, and I will be presenting some of the findings of our project, which was called Can We Predict Stock Prices Using NLP Techniques? And what we were trying to do is to look at the impact that corporates filings such as 10K or 10Q have on the stock price of a company. So here, for example, we have a 10K report of Twitter, and I'm sure all of you know, but the objective of these reports is to keep investors informed about the present financial condition and the future outlook of the company. And in our case, our group was focusing on 50 companies of the S&P 500 of 5 sectors. And in total, our dataset consisted of 1,095 reports that we scraped from the EDGAR website. And I want to say that we spent a good part of the project scraping these documents because we were just extracting the management discussion section, because that's where we believe that the company gets to tell the story in its own words, and it's also where we can perceive the sentiment. So from these 50 companies, we use the reports from 2013 to 2019 as our train data, and the remaining as our test data. And then, well, as Professor Lehalle was saying, we started, as anybody else does, with the dictionary-based models, but we found two main problems. So the first one was that very few words got classified by Loughran-McDonald dictionary. In fact, in average, only 1% of the words in a report were classified as positive and about 5% as negative. So that was one of the first problems. And the second one is that using a dictionary-based approach is blind to context. So for example, words that could be classified as negative, such as liability, might not be negative if depending the context, for example, a decreasing liability. So that's where we decided to use the two NLP techniques. The word-to-vec model we used to expand the LM dictionary, and Finberg we used to understand the context. So I think Professor Lehalle explained very well all the Skipgram model, and that's exactly what we did. So what we did is that we took all the classified words as positive and negative that were found in the report by Loughran-McDonald, and then we train a Skipgram model on each report. And then we expand, we find the most similar words and add them just to the dictionary if the probability of being the most similar one is greater than 95%, and if that word is not present in the negative words. And we did the same for the negative words. And that way we were able to expand a little bit the LM dictionary. And at the end, we ended up having like 8% of positive words in each report and 7% of the negative words. So that was also more balanced. And when trying to see the words, it actually made sense. And then we use the Finberg in order to try to account for context. So the way that we use, well, I don't know if you're aware, but Finberg is a model, is a BERT model introduced by Google that is it understands contextual relations, and it's trained from left to right and right to left. So what we did with each one of the report is that each one of the sentence was classified as either positive, negative, or neutral. So those were or like those were like the first variables that we had, and then we tried to build some features to try to measure sentiment and word complexity. So some examples of sentiment measures that we created was the polarity for the word classification, the polarity for the sentence classification, and then we also tried to measure word complexity. So we were taking a look at how many sentences are in the management discussion, how long are these sentences, and that was something that varied a lot sector from sector. And then after we created this, we had about like 13 features. We ran an XGBoost model. Oh, and our Y variable or prediction was whether the stock price will go up or down. And we accounted for market returns. And the way we did that is like we set a time interval, let's say 5 days. So we take the stock price 1 day before the file releasing, then the report is released, and 5 days after. So that's like the 5-day return. And if that is greater than the return of the market, that's a 1. And if it's less, that's a -1. And actually, our accuracy was quite bad. For the short term, we have a 61% accuracy, and for the long term, a 53%. And then we tried to see if we could at least do some kind of a strategy from this. So what we did is that we use our predictions as the signal. So if the prediction was 1, then we long the stock. If the prediction was -1, then we short the stock. And then we compare to a portfolio that is all long and equally weighted. And on both short term and long term, we could find that our strategy was better than the equally weighted. So I think there is still something that can be done out of this, but it sure needs more research on this. First of all, because we need more companies, and I think it will be worth dividing it sector-wise, because each sector looks very different. So for example, financials has a very long report, then technology is very succinct. And yeah, I mean, here is my contact information and the link to the GitHub. I'm happy to answer any questions you might have.
Okay, Sylvia, thank you very much. I'm not sure. Oh yeah, Charles is still there. So let me sort of, we have another 5, maybe 10 minutes for Q&A. So I'm going to start kind of reading them out. And it seems that maybe not everyone has access to the chat. I guess the chat has been a little bit not very chatty, let's say. So so I'll focus everything sort of my attention on the Q&A. So so we have one question. Let's see. Is it possible to compare the prediction model to expectations? 10K can be positive, but still below market expectations. Okay, so in a way, what we're doing here, are we reading just an absolute feeling, or is it possible to see this NLP as being compared to pre-10K expectations?
In our project?
Well, this is a question for both of you, sort of, maybe it was not something that either of you have tackled, but I suppose that it's an interesting point, which is, what if there's great news, but the great news was expected? Is that something that NLP would be able to help, or would it be a building block?
Yes, I think that when you use machine learning, I mean, when you use data science in general for financial markets, you make, my opinion is that it's good to make the difference between compressing information. So you've got a highly unstructured data and you want to transform them in low dimensional time series that are indicators of something, usually on the health of the well-being of companies, governments, countries, sectors, I don't know what. So it is what you are trying to do. I mean, data set per data set, and maybe jointly using several data sets. And then you want to infer returns of that. But I think that there are 2 different tasks. If you start to mix, to try to simultaneously understand the text and then say, oh, but in fact, maybe the guy is talking about something different because another guy talked about something else, or because numbers are different, it will be too difficult. And especially, I mean, all these machine learning methods, we know that they are prone to overfitting. So my advice would be, try just to use them to compress information and to build indicators that are informative about what is exactly in the data set. And then you can use your good reasoning, that is the one that the guy answering the question, to say, okay, but there are this surprise. We know in finance the surprise effect very well. So now, if you've got something coming from NLP and estimates coming from a database of estimates, you can do the surprise indicator by yourself and a surprise predictor. But trying to mix all in a big black box, I think it's quite difficult. Or for me, it's very difficult.
Yeah, and I remember, Sylvia, when your team was working on this, we definitely found that certain companies were overall more rosy tinted. Tech companies, everything's going great all the time, and maybe these banks that are a bit more, morose and have more negative words. essentially, so each company has a vocabulary, and maybe these surprises might be compared to that company's own corpus, maybe.
Exactly. I think that's a good idea to improve maybe your model.
So we have a question for you, Sylvia. How did you choose the 50 companies out of the S&P 500, by market cap, or was there another criteria?
So we decided to choose 10 from each sector. So I think we had financials, healthcare, and then I think actually we just took them at random. Yeah.
Okay. So, but with a spread of industries. So, and by the way, if anybody does want to dig deeper, I encourage you to look at Sylvia's GitHub repository. We have a question for Mr. Lehalle relative to the work you presented. Is there work being done on adversarial training of these models to boost robustness to poor performance, on synonyms, antonyms, where the generation is not done according to preset grammars, but instead through an agent trying to confuse the discriminatory model?
Yes, I think that it is something that we looked carefully in the team. And in fact, there is a lot of work, but it's for NLP exactly on this topic, but more oriented to gender neutrality. Okay. When you want to learn something, and in fact you do not want to have a bias toward, I mean, men are, I don't know, medical guy, I mean, the medical industry, women are more nurse, and men are more doctors. So it's not something that you want if you want to take decisions about that, etc. So there are techniques that are adversarial learning to try to replace words by others. I mean, you've got two kinds of techniques. Either you use a part of speech tagging, and so you've got placeholders and you put synonyms or antonyms where you want to have neutrality. Either after that, once you've got the embedding, you identify, I mean, algebraically, the subspace that is spanning by this kind of men versus women dimension, and you orthogonalize your embedding to this dimension, and now your embeddings are neutral. Okay. But here, what we want to do is exactly the reverse. We want to break the neutrality between positive and negative words. So for some, I mean, for at the last slide, when I've shown this embeddings of company names, you can, I mean, it could be a good idea, or it could be an idea to try to neutralize the company names, for instance. But I'm not sure. I mean, I think it's an open question, because imagine, so it's something that we didn't test it, but imagine that, okay, companies have a color. I mean, when you learn during 1 year embeddings, some companies have a positive or a negative color. Okay, say that now you are building a portfolio on that, okay, a factor. What will it be? In fact, it may be simply like a trend following something. Because it means that if during 1 year, the company was very close to positive words, and other company very close to negative words, one is going well and the other is not going well, if you build a factor out of that, it means that you believe that it will stay. And so somehow it can be quite correlated to a trend following strategy. So again, it is a difference between exploiting unstructured data to make indicators and building trading strategies. And the two aspects are, in fact, different, I think. It's good to build a factory to generate a lot of informative features in low dimension, and then to have people trying to combine this data, low dimensional data, to build predictors. And there are two different tasks.
Okay, thanks, Charles. I have a question. I think this is for Sylvia. That seems to be from, so it's from Dajeng Zhu, who it sounds like he's tried his luck at NLP before. He's asking, any thoughts on extracting a section from 10K besides just trying to locate the section title? Some 10Ks have weird titles or combined sections.
Yes, so that was a very difficult task for us because so when we were extracting, say, I think it was item 7, management discussion. So companies have been updating their format. So sometimes they will say item 7 dot management discussion, and then when we scrape, it doesn't find the section, but it's there, and then each company calls it a little bit different. So we had to be kind of like, we had a list of all the possibilities that we were doing it, like they could write it, and then we will do it company wise and make sure that we were in each report doing it correctly, because the first time we scraped the whole S&P 500 and then we realized that many of them were empty because we couldn't find. So then we had to do it like before automatizing, really making sure we were covering all the possibilities, and even then trying to do like one company each time and making sure we had all the information correct.
Okay, thank you. So we have one more. I think it's to both of you, but I know that Charles mentioned this. Bloomberg sells a new, so this is Philippe Perumal says Bloomberg sells a news sentiment index. Did you compare your own embeddings and the index of Bloomberg? Many thanks.
So I didn't, and it was not the purpose of this study. I think that again, to go back to this idea that you've got features that you can build on text, and then you've got predictors. Bloomberg, they are probably trying to build predictors more than indexes. And so then when you build a predictor, it's highly mixed. It's mixing a lot of things. So if it depends how you want to use that. I mean, if you never used and you do not plan to have your own text embeddings and polarity indicators and so on, it's good to try this kind of off-the-shelf solutions. But if you want to make an effort yourself, it's difficult to benchmark yourself against that, because my discipline would be not to try to supervise my indicators with returns at first, to be really, I mean, NLP indicators. And so why competing with indicators that have been built via supervised learning on returns? It is, they are not living in the same space.
Okay, so we have, I'll take maybe one or two more questions and we'll call it a night, because I guess in Paris it's about midnight, right? So we need to go to bed soon. So we have Nikolaos Rapanos who asks, how would you see the use of NLP to construct empirical asset pricing factors jointly from asset returns and text data?
Okay, so there are papers about that. I mean, the first paper I've shown in my slide is done by Brian Kelly, and they are doing more or less that.
Mm-hmm.
So of course, in all these factors literature, people are doing that for, I would say, the last 5 years for sure. I mean, the way we are talking about embeddings and so on, and yes, I mean, it's natural to build, but you've got so many NLP factors, I would say, because Sylvia can build one using Edgar feelings, and only one section, I mean, the disclose of risk, for instance, and other in management foreseeing, or I don't remember the name. So you can have a lot of NLP factors, because NLP is a technique. And in fact, what is important is the information contained in the corpus. So you should have like a 10K factor or a 10K risk section factor. You could have like a analyst reports factor, earning calls factor. And so NLP is just a technique. The corpus is the most important in that, because the information is the corpus. So the factor will be related to the information contained in the corpus.
Okay, well, I think I'm going to leave it at that. This was really a very exciting talk, and I liked a lot of things about both your presentations. These generative models are quite fun, and I think they give a really like good grounding to the whole thing. Sometimes I play on my iMessage autocomplete and just autocomplete, and I get a text that sort of sounds like Sasha but isn't Sasha. And I think that's your idea is somewhat similar, you know, trained on, you know, Twitter's management sections. You can do a financial mumbo jumbo out of Twitter, and that I think is an interesting sort of way to think about NLP. And I hope that the attendees will dig into the GitHub that Sylvia shared with us, because, you know, this is a hard topic to get into, but I'm sure that that people will be able to use that. And thank you, both of you, and have a wonderful evening.
Thank you.
Thank you.
Bye.